The federal government flags a green tariff on imports of steel and cement from places like China and India. Demand for premium drops delivers a rosy outlook for Australian wine, and Elon Musk slashes the prices again, sparking fears of a new EV price war. Welcome to Fear and Greed Business News, Australia's best business podcast. It's Wednesday, the 16th of August, 2023. I'm Michael Thompson, and in Sean Aylmer's absence, I'm joined once again by Jennifer Duke. Jen, good morning.
Good morning. It's very good to be back.
We have a great interview coming up after the show. You've spoken to Commonwealth Bank Chief Economist Stephen Halmarick, who, the insights that the Commonwealth Bank has access to are quite extraordinary, and Stephen's a great communicator.
It's pretty incredible. He was saying that they've got access to something like a third of the market, so we can see what they're spending. So he's got some really good tips in there on what people are and aren't spending their money on right now.
Yeah, and my favourite part of the conversation is the very clear predictions for interest rates, when we're expected to see a next interest rate move and the direction that move is going to be in. And he's very, very direct on that. So it's definitely worth sticking around to listen to Stephen Halmarick a little bit later on. The main story, though, this morning, Jen, the Australian government might soon impose a green tariff on imports of steel and cement. And this would affect countries like China and India and even Vietnam.
Yeah, Climate Change Minister Chris Bowen is trying to level the playing field for Aussie producers with a potential carbon border adjustment mechanism. And this is really just a fancy way of saying a tariff with eco-friendly conditions attached. Australian companies need to cut their carbon emissions, but it comes at a cost. So he reckons a solution might be forcing offshore competitors to pay if they're from countries with weaker decarbonisation policies, which is to say Bowen is looking at protecting local companies while Australia transitions to net zero.
It's a really interesting idea, and I suppose there's a few questions that come out of this. Kind of how likely is this, and how soon is soon when we're talking about this potential measure, because it would have a fairly big impact.
It's a very good question, and at the moment it is just being considered. But there's complex rules at play here, including from the World Trade Organization, and there's geopolitics to think about. However, the government's major decarbonisation policy hit industry from July 1, so there's a sense of urgency as well. Industrial manufacturing and resource companies have to cut their emissions by around 5% a year until 2030, and they'll be feeling more pain as this ramps up. Also worth noting that the European Union is looking at a similar idea from 2026.
Is this, I suppose one of the criticisms potentially of this idea would be, is it just helping the big emitters?
Yeah, it's definitely one big argument, but the government is worried about what is known as carbon leakage. And this is where producers shift their operations to other countries where carbon emissions policies are less aggressive and therefore it's less costly to operate. It's all about finding the right balance and ensuring Australia doesn't lose the economic benefits of these businesses in the first place while ensuring the net zero goal is reached. Bowen flagged a review of carbon leakage would be undertaken, and this was welcomed by peak employer group AI Group.
Carbon leakage. I have not heard that term before, but I guarantee you now I'm going to hear it almost every day. It's one of those things, as soon as your attention is drawn to it, you just cannot avoid noticing it then. This is clearly a big problem.
It's definitely a big issue. And as everyone around the world goes to their different policies of decarbonisation, there's all this mismatch between the types of subsidies and tariffs that are going to be put on different companies. So it's going to be pretty interesting.
Well, I suppose there's almost kind of a template for it then in terms of various kind of international tax policies, isn't there? Because you see that happening with companies moving operations to jurisdictions where the tax kind of concessions might be greater. It's not so dissimilar.
That's probably true to some extent, but I would say that with net zero, there is no template for how we get there. And this is going to be a pretty wild ride, to be honest.
Okay. All right. Interesting discussion, and I'm sure we'll be continuing to look at this one for some time to come. Local markets, how did they perform yesterday?
The S&P ASX 200 closed up 0.4% to 7,305 points, boosted a little by weaker wages growth, and more on that one later. Healthcare and information technology led the increases. Cochlear and CSL both reported increases in profit, and both saw a jump in share price. Cochlear was up 5.7%, while CSL closed 3.7% higher. At the other end of the market, Syrah Resources was down 5.2% and Gold Road Resources was down 3.9%.
International markets, there's a fair bit happening at the moment. What's going on?
It's been so busy internationally. Over in China, the central banks cut rates unexpectedly with a 15 basis point drop to 2.5% on the 1-year medium-term lending facility loans. This suggests they're taking their economic slowdown pretty seriously. Over in Argentina, President Alberto Fernandez has devalued the peso by 18%, taking the official rate to 350 per US dollar, and its central bank hiked its benchmark lending rate. Also in Argentina, libertarian and anti-establishment presidential candidate Javier Milei received the biggest share of votes in primary elections this week. But over on Wall Street, Bloomberg is reporting that Michael Burry's Skion Asset Management sold its holdings in 2 Chinese tech giants, Alibaba and JD.com, in the second quarter. This is a pretty big sell-off as the 2 companies made up 20% of the firm's portfolio at the end of March.
I'm very impressed by your pronunciation and just managing the Argentinian presidential candidate. That was quite a mouthful, and you got through the whole lot very, very smoothly.
It was hard work.
Now, I've got to ask this question because Sean Aylmer's not here to ask questions kind of motivated by his self-interest. He is currently coming towards the end of a brief trip to the US, and he complained a lot in the lead up to it about the Aussie dollar and changing all of his currency over to US dollars. How's the Aussie dollar traveling at the moment?
He's not going to be very happy because it's still very low. It's trading at a touch under 65 US cents.
Oh, I shall ask him about this when he gets back and see whether he is in fact unhappy. We'll be back in a moment with the rest of the day's business news. Jen, National Australia Bank brought in $1.9 billion in cash earnings over the June quarter, slightly above expectations and 5.8% up year on year. The bank has announced an on-market share buyback worth up to $1.5 billion for the next 12 months.
Yeah, the real talk of reporting season for the banks has been all about mortgages, though. It's the first time in many years we've had pretty high interest rates, and there's a big focus on how homeowners are faring. CBA last week said their customers are still doing all right overall, but there was a small increase in arrears. Bendigo and Adelaide Bank have also seen a small rise in customers falling behind, and we're seeing that now with NAB too. Their number of loans that are more than 90 days overdue increased slightly. That doesn't sound too bad, but it's possibly a bit early to say that the mortgage cliff we were all worried about isn't going to happen yet. There's a lot of people rolling off their fixed loans onto higher variable rates over the rest of this year.
Jen, I mentioned this one at the top of the show. Treasury Wine Estate shareholders will be, I suppose, they'll be raising a glass to the top end of town. It's one of the big takeaways from their results, which shows premium customers are still drinking their favourite brands.
These results are really fascinating in terms of the cost of living pressures at the moment. So the Penfolds arm of the wine company had a 14.2% increase in earnings to $365 million over the last financial year. And Chief Executive Tim Ford said the demand for premium wine is likely to stay consistently high.
What about the end of the market, I suppose, Jen, where you and I probably dwell, the cheaper bottles?
I feel very, very judged right now.
No. You're amongst friends. Please, go on.
Well, look, this is where things were getting a bit wobbly in their results. There was a 5.4% drop in earnings across the arm of the business with those cheaper brands like Wolf Blass, Pepperjack and Lindemans. And the net profit for the global wine company fell 3.3% to $354.5 million. But profit margins were up overall, and the share price closed 2.8% higher yesterday.
Right, and we've been talking a lot about a potential easing of trade tensions with China lately, particularly the potential for that to affect wine. I imagine that this would give them a boost, Treasury.
That's a really good thought. Treasury Wine does have a bit of an arrangement at the moment that helps them get wine into the hands of Chinese consumers, but is not ideal. And the business is absolutely watching for improvements in the relationship between Australia and Beijing. A statement from the company said Penfolds is going to take a measured approach to phasing shipments across all markets so it can maintain flexibility of global distribution. In other words, they're going to be holding on to some extra bottles of Penfolds for a few months to see how it works out.
That's a fantastic way just to summarise and simplify for me. Thank you. Australia Post is stepping up its services across capital cities in a bid to help e-commerce retailers battle against retail giant Amazon.
The new service is called Australia Post Metro. It is a next-day delivery service for inner-city capital areas, and there's plenty of demand for quick and reliable deliveries in a highly competitive environment. Who knew, really?
What a surprise.
Well, given we're all getting all our Amazon packages all the time, I think they've figured it out. So this is partly to do with that big shift in shopping behaviours, but it's also people looking for value brands on the internet.
And so when does this all kind of kick in? When can shoppers and sellers get access to it?
So, Melbourne, Sydney, and Brisbane are the first to already get access to this new service, and some retailers are already using it. Crucially, it will mean that merchants can access later cutoff times for orders, so customers can still get next day deliveries, even if they're really bad late night shoppers. And this has required quite the effort from AusPost, which has had to change up its systems to do this. They're hoping to sign up more brands in the months ahead and extend into other metro areas, but unfortunately, those of us who live in the regions probably can't expect it anytime soon.
I suppose, I mean, obviously you mentioned that there's later cut-off times for orders and things, but it doesn't sound that different to what Express Post with Australia Post used to be before those kind of time limits blew out to it will hopefully be next day delivery, might be the day after that or possibly the day after that. So it feels a little bit like we're actually just kind of going back to where we were probably about 5 years ago. I don't want to be cynical here at all. It's not my job to be a cynic.
Those clauses are straight out already, I hear. Look, I think it's actually a good thing that they're at least looking at the competitive tension, listening to what the retailers are saying and trying to come up with a solution, because there's genuine problems, I think, in that friction area with the back end and the late night orders. And I think if you are reliant on AusPost and then you're up against Amazon and their own delivery service, you sort of need them to step up their game. So I think there are actually some real improvements in there on the back end.
Yeah, no, that's a good point. That is cause, I suppose, for shoppers to be a little bit optimistic, and maybe they are actually feeling a little bit happier at the moment. You've got ANZ Roy Morgan Australian Consumer Confidence figures that showed last week there was an increase in what the bankers now called potential green shoots for the economy. That's optimism. You'd be watching this very closely, I'm sure, because in your day job, you're the economics correspondent for Capital Brief.
That's right. And I love the term green shoots. It's one of my favourites. It gives us all a bit of optimism.
I've started using it now in everyday conversation.
You sound really fun at parties.
Please go on. This is turning into quite the show. Please go on.
The increase in confidence helped offset the fall from the week before last. And while it's still pretty early days, the 4-week moving average is at its highest level since May. Inflation expectations fell to their lowest level since mid-May too, and current economic and financial conditions both improved on the measure. So I'd be expecting to see improvement in consumer confidence right now because everyone's talking about the potential end of the interest rate rise cycle. But as you mentioned, that declaration of green shoots did come with a big question mark at the end of it.
A bit more good news on the economics front. The Reserve Bank published its board minutes for its August 1 decision to keep rates on hold, and they were much more upbeat in their tone than they have been in the past.
Yeah, I was particularly struck by the note because they used terms like reassuring and encouraging, and that's the first time I've seen them in over a year. They were obviously talking about inflation figures, which had been released a few days before they had that RBA meeting, and it showed that inflation was much slower over the June quarter than economists were expecting it to be. ANZ said the minutes support a hawkish pause decision, and the minutes reiterated that the economy is on a narrow path, though, and there are still risks to the outlook.
Yeah, and wage price data also came out too yesterday. Has that changed anything?
Yeah, the wage price index for the June quarter shows 0.8% growth for the 3 months to June. The Australian Bureau of Statistics figures were slightly weaker than the RBA's 0.9% forecast, and it's further cemented expectations for rates to remain on hold at the September meeting. And I talked a little bit more about this with CBA's chief economist, which everyone should have a good listen to.
Yeah, Stephen Helmaric is coming up after the show. We talked earlier, Jen, about it's obviously reporting season, and we talked about a few of the companies that had really kind of hits yesterday. A couple of misses as well. It was a tough day yesterday for job search site Seek. Earnings and annual revenue were both below forecast. Shareholders are a little bit shaken by weaker than expected guidance as well.
Yeah, earnings before interest, tax, depreciation and amortization increased 7% to $546 million, which is below the $560 million guidance, and annual revenue was at $1.23 billion, below the $1.25 forecast. So analysts were largely focused, though, on the new outlook and CEO Ian Narev's commentary. And already, all states except for Queensland and Tasmania have seen declines in job ads over the year. And Narev said that economists are forecasting lower levels of economic activity and they're expecting higher unemployment to lead to a drop in job ads as a result.
Federal Treasury is going to expand its review into secrecy laws that affect the tax office to include the ramifications of a $1.6 billion tax fraud scheme undertaken on TikTok, the social media platform. Tell me about the scam. This is a fascinating story, this one.
That's right. The scam involved encouraging people to get an ABN and file fraudulent business claims for GST refunds. It went viral and was uncovered by the banks, who then reported it to the tax office, and the ATO's been investigating since 2020.
Okay, so probably 3 years. Why is the government concerned now?
The tax office says that strict taxpayer secrecy laws are limiting what it can reveal about its investigation. And Assistant Treasurer Stephen Jones told the Financial Review that the government was going to have a broader look at tax secrecy now, and they did not want the laws to be used as any sort of a shield against the Commonwealth tracking down and responding to fraud. About 60 accounts have been banned by TikTok as a result, and they've removed hundreds of videos posted by influencers, I suppose, promoting the scam. So in the meantime, everyone needs to be a bit more wary on social media.
Yeah, I think that's very good advice. Former Reserve Bank Deputy Governor and current Fortescue Future Industries Director Guy Debelle has taken aim at the federal government, Jen. He says they're not doing enough to drive decarbonisation.
So Debelle was at an Australian Business Economists event where he was speaking on the issue of climate change. He's particularly worried that Australia is complacent and lagging behind other countries on climate action. And he said it is great for there to be stretch goals for the industry, but they had to be realistic. Seed capital is currently provided through agencies like the Australian Renewable Energy Agency to help spur on energy and technology development in renewables. But he wants more support, and without it, he's worried we'll face another period like 2019-2020 bushfires, and that's what will be needed to kind of galvanise action if we don't do it now.
All right, turning to international news now, and former US President Donald Trump has been indicted for a fourth time.
He faces criminal charges in Georgia over accusations he was scheming to overturn his 2020 election loss. Prosecutors have charged 18 other people, including Trump's former White House Chief of Staff Mark Meadows and lawyer Rudy Giuliani. For his part, Trump has called the indictments bogus.
Yeah, he's always good for a headline, isn't he? Moving on, Jen, the fallout from the global financial crisis is still being felt for companies in the US, with Swiss banking giant UBS agreeing to pay $1.4 billion to settle claims it misrepresented bonds backed by mortgages. This is coming from a long time ago.
Yeah, I'm sure it doesn't feel that long ago to some people, but it really was, when you think about it. And these are civil penalties for the bank's activities in the lead up to the GFC. The Justice Department said the banks knew the mortgages behind those securities were non-compliant or they were problematic, but sold them anyway. The UBS statement, which is up on its website, says it's a legacy matter from 2006 to 2007, and the settlement has been fully provisioned for in prior periods.
All right, last one, Jen. Elon Musk's Tesla has slashed prices on its cars again in China, sparking fears the international price wars on EVs will ramp up again.
Tesla cut the prices on its long-range and performance versions of the Model Y, according to Bloomberg, which was citing the company's Chinese-language Weibo account. This sent car stocks lower. Tesla started cutting prices towards the end of last year, putting the gap between the cost of its vehicles to about 50% below those in the US and Europe. Bear in mind that in July, Tesla agreed to sign a pledge with other major car makers to avoid abnormal pricing. Days afterwards, Musk said they could still reduce prices due to turbulent market conditions. Maybe that's one of those times.
All right, up next is a Fear and Greed Daily interview. We've mentioned it a couple of times. Commonwealth Bank Chief Economist Stephen Halmarick is your guest today. Also, while you're looking for things to listen to, Wednesday is, of course, the day that our sister podcast, How Do They Afford That, is released. That's a podcast that really focuses on kind of making your money work a little bit harder for you. A bunch of ideas and things in that space. Today's topic, we're actually looking at multi-level marketing schemes or programs. And there's a lot of kind of very legitimate businesses in here, things like Tupperware and Avon and Amway that have existed for a very long time. And we're looking at those, whether it's possible to actually make money, some of the risks you need to be aware of, the costs that may be involved if you get into one of those, just everything you need to know about multi-level marketing programs. That one is called How Do They Afford That? And it is out today. Thank you very much, Jen.
Thanks so much, Michael.
It's Wednesday, the 16th of August, 2023. Make sure you're following the podcast and join us online on LinkedIn, Instagram, X, and Facebook. I'm Michael Thompson, and that was Fear and Greed Business News. Have a great day.